Recorded.
We're good.
Okay. Well, welcome everyone to the special call meeting of the Joint Development Authority of the Unified Government of Athens-Clarke County and the City of Winterville on Monday, January 3rd at 5:35 p.m. That was a mouthful. Let me get my folder up so I can get the agenda going. So I can see it. All right, I just called the meeting to order. The next item is approve the agenda. Do I have a motion to approve the agenda?
I'll motion.
All right, Stephanie motions. Do I have a second? All right, Tim seconds. All those in favor of approving the agenda, raise your hand or say aye. Or both. Okay, you're not going to do anything, huh? All right, motion passes. Next item on the agenda is approval of the minutes from our 11/3 meeting. I'll have to be honest, I did not read them before this. I was kind of busy. And there's my boss on the line. Hey, Doug. Welcome to the call. We're just getting started. We just approved the agenda, and I need someone to make a motion to approve the minutes from the November 3rd meeting.
I didn't read them either. Can we table this to the next meeting?
Sure.
Let's schedule meeting.
So you'd like to put a motion to table?
Yes.
The approval. All right. There's a motion. Is there a second to that motion? All right. Tim seconds. All right. I'll just call the question. All those in favor of tabling the approval of the minutes from November 3rd, raise your hand or say aye. 1, 2, 3, 4. All right. We're good. All right. That motion has been tabled until our next meeting. Next thing is new business. We have an esteemed colleague here, Sam Latimer, who's going to give a presentation to the draft report for our annual audit. Turn the floor over to you, Sam.
Well, thank you very much. I'd like to share my screen if I can. Am I?
Ilka, you're going to have to give him permission, I think, unless everybody.
I think he can just do it. Give it a whirl, Sam, and if not, I'll pull it up.
You hit the share button. Oh, okay. There we go.
Can everybody see?
If you can enlarge that for my old eyes.
Absolutely.
That's great. I can see that.
Is that better? Okay.
Yes, it is to me.
As you know, this is the first year audit, so we are presenting the JDA of Athens-Clarke County in Winterville for 1 year ended June 30, 2021. I'm going to go through the highlights. Feel free to stop me along the way, ask any questions that you have. More than happy to go through those, and want to make sure everyone understands what we're presenting and all that good stuff. So like I said, feel free to stop me along the way. I have highlighted in here a few items. And so we, as the auditor, we've audited the financial statements. You have a treasurer that helped us, helped me very much. And I appreciate that help. Stephanie did a wonderful job helping me get all the information together. And so I just want to thank her for all that help. Just want to, this is a draft report. So keep that in mind. Hopefully that's not too small there. Can you still see that? This is our letter for the audit. And so the highlights of this letter is that these are your financial statements. As management of the JDA, you're responsible for having your financial statements in accordance with GAAP. And our responsibility as the auditor is to make sure that we agree. So we go through and we test items. We take a look at how things are recorded. We take a look at the accounting principles, and we gather evidence, and we decide whether or not we agree with those. We do that under governmental auditing standards. And so we're issuing our opinion. This is a draft here, and so we'll formally issue at the next meeting. But we do believe that they are fairly stated as of June 30, 2021. And so I will show you the financial statements. Oh, one more item here. Under governmental auditing standards, we also issue a report on internal control. And so when we go through our audit, we like to look at the policies, procedures, and see if those are adequate for your size government and whether or not they fit the role and what you need for your financial reporting purposes. So there's an additional report. So there's a total of two reports from the auditor in here, and I'll go over both of those. I will skip the management's analysis and discussion. That's really a summary of the information that I'm going to present. I'm going to present the financial statements to you straight from the financial statements. So as you can see, this is the statement of net position. The majority of your assets are in cash and cash equivalents and notes receivable. Now that cash and cash equivalents can be a little deceiving, meaning that as of today, you've loaned out a lot of that cash already as it stands today. But as of June 30, you had not loaned out all that cash just yet. Now, if you look at the notes receivable there, you can see that you've got $314,000 of notes receivable, and that's the current portion. So that's the amount that you expect to receive over the next year. So things that are considered current are due within 1 year. And then we've got the non-current portion, which is about $287,000 of your notes receivable. So that's your revolving loan fund. So that's one of your major programs there. Those are the two big numbers on your statement of net position here. And so this statement of net position, it's like a balance sheet in a for-profit entity. Net position, that'd be the same as like a retained earnings or net worth if you were talking about an individual. You can see net position is the bulk. In fact, 100% of your net position is restricted for loan and grant programs. So Athens-Clarke County gave you that money, and they wanted you to use it for loan and grant programs. That should come as no surprise. So total net position, $187,000. That's the total net worth of the JDA as of June 30, 2021.
Sam, can I ask a question?
Absolutely.
We were given $1 million from the county for our revolving loan program, and I'm curious what the other $41,813 was that brought us below $1 million to $948,187.
Can I make sure I understand your question? Are you saying that it looks as if we have not loaned out quite enough money yet?
No, we were given $1 million even from the county for a revolving loan program. And I see that our total assets are less than $1 million. I'm just wondering what the difference is.
Oh, sure. Yes. All right. So there's an allowance on your notes receivable. And I'm going to go over the allowance in detail in the notes as we go. Sure. Yeah.
Okay. All right. Thank you.
I didn't understand the question at first. I apologize. But I will cover that. And if you feel like I haven't, please make sure to bring that back up, because I want to make sure that I could answer every question.
Sure.
So looking at this is your statement of revenues, expenses, and changes in net position. You received from 100% from Athens-Clarke County $2.6 million. You can see that total number there, $2,641,321. And of that amount, you pay those payments to others, that $1.6 million, that's your grant program. So those are the amounts that you gave out to businesses in need in the Athens-Clarke County area. So $1.6 million, that's very close to the number that they granted you for that. I think it was 1.6, so very, very close there. If you look at that contract services, I wanted to point that out. That is some attorney fees that were paid by the county. And so we recorded those as revenue and expense in the income statement. We want to make sure that we showed those on the income statement or the statement of changes in net position. And then you've got about $8,700 in supplies. And so when you take all that in together, it sums up to that $888,187 that we saw as your net position. This being the first year, those two numbers are exactly the same. So your change in net position equals your net position this year. Statement of cash flows, I'm not going to go through that. I feel like I'm going to cover the bulk of these. So I'll go through. So these are the notes to the financial statements. I won't bore you with reading every single one of these. I can see hopefully you appreciate that. But if you look at these in detail, this will tell you how we handled things, how we estimated things. It talks about the programs and those type of things. So, but the highlights here, I'd like to show you as I scroll through. And this goes right along with your question. Your notes receivable, if you look at your total receivable, you had a total loans of about $705,000. And then we calculated an allowance for that of $104,000 total. If you look at that $104,000, that equals about 15% of the total loans. Now, let's think about what an allowance for uncollectible is. Well, it's really an estimate of what we expect not to collect. So we don't truly know that. So we're really estimating that. And we went through a calculation, and I believe you were given some information on the calculation. And so I'll tell you a little bit about that calculation. So we considered anything that was over 60 days past due, we considered it 100% uncollectible. And if it was less than 60 days, we considered it 50% uncollectible. But if it was only 30 days past due, we did not consider that. We considered that current. And so, and also loans that were in the deferral program, we considered those 100% collectible. So those are not in that calculation. But at the end of this, I'll go through the calculation of the bad debts or the allowance in detail, because I believe y'all are going to vote on that policy tonight. So, but if you see.
Hey, Sam, I wanted to clarify that it's the more than 90 days past due is 100% and 60 to 90 is 50%, because we did change that.
No, well, if you look at that policy, that's what I was going to talk about earlier, is that policy that we've got there is it's stated, it's actually, it needs to be updated in that it should be greater than 60 is 100. And actually that was how we first calculated it. And now we're doing the 60 and the 30.
I thought we started with 60 and 30, and you and I said, well, it's so new in it that maybe we should make it 90 days because, you know, some of these people, they didn't even know they were late yet. And I thought we started more conservatively.
That's right, we did. But if you were to look at the numbers, and we'll look at the details here, and the policy does say that. So you're right in saying that. But if you look at what's past due as of November 30th, there are none over 90.
That's right.
And so we had to crank it down a little bit because we knew that there were going to be some that were going to be uncollectible. And so, do you want to take a look at that now as we're going through it?
I mean, I'm fine with how you did it. I just remember that the policy we changed. So the words they're going to see that we're supposed to vote on tonight say 90 days. That's
correct. And it should say greater than 60, 100%, and less than between 30 and 60, 50%, and 0 to 30 should be current.
So I feel like we have the wrong bad debt policy that Ilka sent out then.
That is correct. We need to go over that together.
Okay.
Yeah, we'll need to go over that as we go through. But if you look here, you can see your total receivable was $705,539 with that allowance of 104, which ends up being about 14.79% of your total loan. Now, you think about estimating the issues that come up with estimating a number like that is we really don't have any history yet. This program is new, and so we are really estimating. Now, we next year when we do the audit, we feel like we're going to have a little more history on our side, and so we'll be able to come up with a number that's more accurate. And then here, your notes receivable, you can see the total payments that are expected to be collected over the next few years. You've loaned out that 705, 539. Over 2022, you're expected to receive 314. 2023, you see 344, and then 2024 will be the 46,000 over the year. And then I'd like to point out always like to point out risk or uncertainties that are within the financial statements. And so we list COVID-19 as a risk. And really when we list COVID-19, it's the uncertainty that it brings when you think about economic activity. And it's, the JDA is essentially a response to the COVID-19 pandemic. But we do like to point that out because it does present a lot of uncertainty. And then concentration to revenue, that is 100% of the authority's revenue or support was received from the Athens-Clarke County government. And so that's always a risk as well, because it's not a very diversified stream of revenue. Any questions on that? And then I just want to point out that we talked about earlier how there was a little over $300,000 worth of cash. There were an additional 24 loans that were issued out and acted upon after year end, which was about $290,000. So like I mentioned earlier, a large portion of the cash that you had on hand, you've essentially loaned out since June 30, 2020.
And we've collected a lot from the loans that have been due since June.
And that's correct. And you have collected some cash, so that would increase your cash as well. And like I mentioned, we have two reports here that we issue. Governmental auditing standards. I like to talk about governmental auditing standards as you have regular auditing standards, and then you have governmental auditing standards. Under governmental, we're required to look at your internal control. Are you in compliance with state law? Are you in compliance with your grant agreements? Are you spending restricted monies as you should be? And so we went through and looked at internal control. We didn't find any issues with any compliance or anything like that, but we did have one internal control issue, and that is there's a lack of segregation of duties. And I think that's probably shouldn't come as a surprise to many of you, because you really don't have a staff, and you've got one person that is handling most of your financial transactions, which poses a risk because one person would be able to, there were no checks and balances. However, you have alleviated that. If you see here, I described the condition, the lack of segregation of duties, and the requirements to have an effective internal control structure requires you to have a segregation of duties. That's very difficult for the JDA because you have no employees. Essentially, you have a volunteer treasurer. So it'd be very difficult to segregate duties with the resources that you have on hand. And so we mentioned that to management, and they agreed with that finding, and they have already, and I believe y'all have already approved some mitigating factors or mitigating procedures to reduce some of that risk. And so I believe there's some check signing by the chairman, and there's some review policies, and I believe you're all familiar with those.
Yeah, you're correct. I am the only, as chair, I'm the only one who could write checks, and Stephanie does the balancing of the funds. It used to be we both had a signatory on the checks, but no longer.
That's right, right. So we've removed Stephanie off of the able to sign, and right, because she's doing the recording, and we just want to have some checks and balances. Not say anything bad about Stephanie, or we believe that she would do anything wrong. This is just simply to safeguard the assets of the JDA.
Yep, and same with me. But anyway,
that's right.
It's taken care of as far as I'm concerned.
And so that's really that's the bulk of our report. Any questions? Anything that popped up there that anyone has any questions on? I'll be happy to answer anything you have.
Anybody have any comments they'd like to make? I still didn't get a clear sense of where that extra money is, but I don't care. It's not important. I can read through the full report and get the answers to the questions I need.
Okay, I believe the majority of that should be in that $104,000 that was the allowance for that amount.
That's a
Okay.
contra asset account, David, and it reduces the amount of the asset in the amount of the allowance. So the money, it's still there. It's just maybe we won't ever collect it.
Got it. Okay.
And
All right.
hopefully you can see it here. You see that total receivable, that 705. And if you take that additional cash that you had on hand, was roughly $300,000, that would get you close to that $1 million. But we do have this allowance here, which is that negative. And that's that portion that we feel like we won't collect due to individuals not paying that we've loaned money to. Hopefully that's not the case. There's a possibility that we collect those. We expect next year to have a much more accurate number, but we believe that we've calculated a number here that is reasonable with the information that we have.
Sure, I believe it.
at
I'm
this
fine.
point.
I'm fine with it.
Okay, perfect.
Any other comments or questions you have for Sam? All right, hearing none. Thank you, Sam, for your effort and for giving us your, this is still considered a draft report?
This is still a draft. We wanted to present a draft because you guys were going to vote on the allowance calculation tonight, and that's what Stephanie and I were just speaking about. And so,
Right.
I'm gonna probably stay on to help discuss that because I know there's some confusion there.
That's fine. Okay. All right. Thank you for your presentation, and we'll move on from there. Let me go to the draft. So we've had the presentation. The next new business item is to review, discuss, and vote on adopting the JD uncollectible loan policy and allowance estimates. So between you, Stephanie, and with Sam chiming in, why don't you take it over?
Well, Sam is going to present that.
Oh, okay. Okay, that's fine.
Yeah, and I'll present this here. And this is what Stephanie and I were just speaking of. And I believe that I sent the wrong document here and what this should say. And here, can I unshare?
Yeah, you just did.
Okay. Okay, so the document you have, let me share again here. And I apologize for the confusion. I believe I emailed Elka the wrong policy. So the policy that you have, and this is what you have here, and it states 90 days and between 60 and 90. This was our original estimate, and this is what we were originally believing that we were going to use. This is not what we have actually calculated, and I apologize for the confusion. I believe I just sent out the wrong one. So what you should have is this document here. And so what we've essentially done is you have a loan receivable. And so what we've done is we've calculated an allowance based on time. And so the older receivables are calculated as uncollectible more. And so what we used was anything that was older than 60 days, we calculated as 100% uncollectible. And if it was between 30 and 60 days past due, we considered it 50% uncollectible. And so we were using this to come up with an estimate to calculate that $104,000. And we compared that to the total of the 705 that was calculated, that was loaned out, the 705. And it was, like I said, it was about 15%. And we believe that's a reasonable number to calculate an allowance based on what we have at this point. So,
Sam, could you make it a little bit larger for reading purposes?
Sure. I apologize. Let me see.
Just down there in the right-hand corner.
Yes, thank you. Oh,
there we go. That's good.
Went the wrong way.
Yep.
Is that better? A little more?
A little bit more. Yeah, just one tiny bit more.
Okay.
That's good. All right. I can see it now.
And so it also in here, we wanted to reserve and so really this is your policy. Really, I was really just wanting to help assist with calculating the policy. And so what the two last bullet points, I've covered 1 through 3. The last bullet points is I think it will be best to have a policy in place that you can deem something uncollectible if you have other information. So if it's within 30 days and you know that someone has fled the country and they're not going to come back and pay the bill, then you could go ahead and write it off. So at your discretion, you have the ability to write off whatever you would like to write off or whatever you deem appropriate to write off.
Yeah, can I ask you a question? I mean, about the bullet just before that. So I'm guessing that at a meeting, of which I don't remember, but it's fine. We decided that we are going to write off anything that's placed in default after 180 days without any discussion. It'll just automatically get written off.
We didn't decide that. That's what we're trying to decide now.
Okay, well, that's the one that I have a problem with.
Yeah. Well,
Yeah.
we have a problem with it too. So we talked to Dan about it, and he basically said you have to weigh what does it cost to try to recover the funds versus what can you actually recover. So I did talk to a collection agency in Athens, and there's many others we should gather quotes from.
Right.
But you're not going to pay them anything, but you're only going to get 50% of what they collect. Well, actually, wait. They keep 25% unless they have to file collections reports on them or go to court for you, and then they keep 50%. So you'll collect something, but maybe nothing. But you don't lose anything either if you collect nothing.
I understand that. I understand that. I guess maybe it's not worth quibbling over, but for an automatic rule to be triggered without us voting on it is what I have an issue with, because that bullet point says that regardless of whether we agree with it or not, after 180 days of default, it gets written off.
Well, one thing to keep in mind, and I agree with what you're saying. Keep in mind that this is simply the accounting policy. And so that when we say write off, we're talking about what's going to be in the financial statements. So that doesn't mean collection efforts stop or anything like that.
Well, then I'm that wording, when something's written off, in my opinion, it means that we are not going to collect it. That's what my definition of written off means. So if that's the wrong definition, that's fine. But that's when we write off, when a debt is written off, that means we ain't going to collect it.
No, and that's right, because here at the bottom, I actually said that there needs to be at some point where you've decided that you have stopped collecting.
Right.
These are simply suggestions. This is not written in stone. You guys are the ultimate deciders on this policy. I'm saying here for guidance.
But
Okay.
to me, the accounting principles, our balance sheet has to reflect what our actual asset values are. And if there's no chance of collection and no success in it, then it's not an asset anymore and it needs to come off the books.
That's correct. Yeah.
I understand that. I just still am quibbling with the idea of having a rule that automatically writes it off with us saying, yes, we think this is uncollectible, let's just write it off. Because it's setting a timeline for an outstanding balance in default, and it'll automatically come off the books in 180 days without our written approval of that.
Well, that is that they haven't paid anything in 180 days. What are we going to do at the meeting where we're deciding if we're okay with that? Because you can't get blood out of a turnip. And it's like, why do you want to have a special meeting to vote on something that's inevitable?
That's fine. If the board as a whole is fine with the rule that says if somebody's in default and hasn't paid anything, and in 180 days we're going to write it off, that's fine. But I want that to be voted upon as a rule.
I'm totally fine with it because I know what the other side of that is.
Okay, that's fine. That's the only bullet that I had a question about, and I don't have strong opinions one way or another. I just knew that triggered. As it stands, we don't get to vote on things that are defaulted over 180 days. It just automatically comes off.
Of this, right?
But it sounds like there's really two issues here. One is the write-off from an accounting perspective, and the other is, does the board want to pursue doing collections? And if yes, then at what point do they want to pursue collections?
Mr. Chairman, can I say a word or two?
Yes, please.
Um, a number have said that there's two issues, and that's exactly right. One is the reliability of the JDA's financial statements. And if you haven't, you shouldn't reflect on your balance sheet an asset that's not really an asset. That's misleading. But
Right.
that's an accounting issue. I guess I'm taking a different approach than our treasurer, but I do think it would be better for the board to vote on whether an account is going to be written off without collection efforts or whether they're going to be collection efforts. I think there's a responsibility there, and it may be a perfunctory vote and maybe after the fact, but to me, that's the difference between whether you feel like you have a duty to try to collect something on the one hand, and on the other hand, whether you have a duty to make sure your financial statements are reliable, which is related but not exactly the same.
I understand.
I totally agree that we should do collection, but we shouldn't wait 180 days to do that. We should be doing that from 90 days to 180 days. And if there's no success, the collections company can keep doing it forever, because for them, it's just annoying emails they send and letters, but they're reporting it to the credit agencies, which is where you have a potential to get it back because they can't get a loan, they can't get a mortgage without paying it off. And that's the value of that collection agency. But I don't think those decisions should be tied up in how we present it in the financials. If we end up writing it off, it's off the financials, and we collect it 6 years from now, well, then it's just income on our return 1 year.
I understand.
Would it be sufficient if if the policy is adopted to say it's a policy for financial reporting purposes only?
That's fine for me.
Yeah, that would satisfy my concerns if it's written off for the sake of after 180 days for financial auditing purposes, but we still have to decide whether we are comfortable just saying we're going to stop collecting anything that's in default over 180 days without vote.
Yeah, I'm not comfortable with that either. I think that's a separate issue that we need to talk about, because we need to collect quotes for that service, because the one that I got may not be representative of nationwide what it cost.
Sure.
So I think that's another discussion we need to have that can't be decided tonight.
Okay. Well, if we modify this bad debt policy to just indicate in a reference to just our financial books, then I'm fine with that. And then we can do our research on collection agencies and take a vote in a future meeting on whether we vote to stop trying to collect. Does that make sense?
Mm-hmm.
Yeah, can I just can I say something? I think the best in between policy here is the best compromise, I guess I should say, would be to say for financial reporting purposes at 180 days, we will book an allowance for the full amount. I mean, at that point, we probably should have already booked an allowance, but I think at 180 days, we probably just need to remove the written off, in the ceasing of collections, collection efforts. I mean, I think is a better way to say that. Am I making sense there?
In the description of what write-off means, just take out the part about collection efforts being exhausted.
That's right. Really, this would be for financial reporting only.
Mm-hmm.
Yeah, as long as we
can
can
have a
change
vote to cease collection efforts.
as long as we can change the wording to reflect that, I'm fine with that policy. We just need to clearly state what we're trying to do and then vote on it.
So, Sam, could you make some edits on that? We can move on to the next item and then come back
Sure.
and vote on this.
Yeah, I'm fine with that.
I will stop sharing and let you guys
Great.
continue the meeting.
All right. Thank you very much.
Mhm.
So we'll come back to that, the loan policy. All right. The third item is to talk, review, discuss, and vote on the approval of an intergovernmental agreement with the Food Bank of Northeast Georgia. I know I received a copy and I glanced through it and I didn't see any major hurdles, but Um, I'd like to, has everybody had a chance to read it? And if not, can we have a motion to approve that, after we've discussed it?
I've read it and expressed my concerns to Dan, and he tells me not to be concerned about some basic language that's in all of these kind of agreements. But I wanted to put on the record with Tim in writing that we acknowledge that the JDA does not have any kind of day-to-day bookkeeping responsibilities, invoicing, expense paying, or anything. No money flows through our account. We're just the holder of the land. Is that the correct understanding?
That is correct.
Okay. Yes, I agree with that. don't want us to be in the process of, other than holding the property until such time as it's, given or paid off, or the food bank takes ownership of it. I don't want to do any work that we have to.
The board probably needs some background on this, and I'd like to say a few
Sure.
words of the documents, but were you looking for a motion, Mr. Chair, before we got into a discussion?
Yeah, I'd rather have a motion, and then you can make your presentation part of the discussion. So I'd like to put forth a motion to approve. As chair, I believe I have, Robert's rules allows me to put my own motion. So I'd like to put forth a motion to approve the intergovernmental agreement with Food Bank of Northeast Georgia as a motion. Is there a second to that? Anybody want to verbal? Okay, Tim, I saw your hand. All right, so we've got a motion. Now we can talk about it. So Dan, if you'd like to chime in, that'd be great.
Well, Ilka or Nikki might be better positioned to give the background on this.
Fine. I just
They
whoever.
were kind of late to the party, so.
Sure, whomever. Ilka, do you
Nikki,
want?
would you be willing to give the overview, please?
Certainly. So good evening, y'all. We were asked, the ACCGov was asked to kind of work in tandem with the Northeast Regional Food Bank to explore an opportunity with DCA. There was a funding opportunity to help them expand their current facilities. It was our understanding that they were in need of such, upgrades. So we decided to join in and be a partner of theirs. At the beginning of the process, it was our understanding that ACCGov would hold the property. Subsequently, after further conversations with DCA, it came to our understanding that we needed the JDA to do such things. We think it's a good project. As you guys probably already know, the food bank was awarded $8.8 million. They're also seeking additional funding through the state government for additional funding to expand their facilities, because it ended up being a little bit larger than we expected. So, it's a good project. I say it's fairly simple. There's some mechanics involved because it's the state government and we have to run it through JDA, but we feel pretty confident that it'll be successful.
Okay. Ilka and or Dan want to chime in from there, or others?
I can start now unless Ilka would like to add to that.
Okay.
So, the state of Georgia has a history of using development authorities as middlemen or conduits in grants, and that goes back to the forgivable loan program, which was ruled unconstitutional in 1995. This money this is federal CARES Act money. It became available, I guess, fairly suddenly, and fairly suddenly, a good amount of it was allocated to food security, and in particular food banks. So what I would suggest the board do, perhaps the chair eventually would modify his motion to move the adoption of the resolution in the form presented, because it covers a number of things in addition to just the IGA. But as background, of the total 82 plus million allocated to the state, 50 million is going to food banks, out of which ACC got almost 9 million, or about 18% of the total, which is pretty good. But there are deadlines on this money. It's intended to meet a emergency situation, so there's a short fuse, which explains some of the scurrying around at the last minute. There is a background to this. The application for the money, gosh, November of last year seems like a long time ago to me, but Some of these documents were created. There's a memorandum of understanding, which is a tri-party agreement between Athens-Clarke, the Food Bank, and the Northeast Georgia Regional Commission, which has been executed and dates back to November. There is also an amendment to that, which is pending for the purpose, among others, of inserting the JDA as the conduit. I'm going to say that instead of title holder. There's more to it than just holding title. But the JDA is not a party to that agreement, but I put in the amendment that we be a third party beneficiary able to enforce it, because that's the document in which the regional commission agrees to do all the administrative things that rightfully our Secretary Treasurer has been concerned about. The holding of the money will be an ACC function in a fund against which those entitled to payment will make requisitions. So there is also a memorandum of agreement, which is a bilateral agreement between us and the Food Bank. So there is an intergovernmental agreement between ACC and the JDA in which ACC asks us to do these things. So there's 3 documents. Okay, so assuming that the JDA is willing to go forward with this, when these documents are approved, a few things will follow. One will be the acquisition of the land. There is a letter, I'm going to call it an option. It's not exactly that, but it serves that function for the acquisition of the land. The documents contemplate the construction of the project. The project is a couple of buildings that are basically warehouses, cold storage and other storage, cold storage and dry storage of food. So the land will be acquired, the facility will be built, and there will be a lease of the facility between the JDA and the Food Bank. The lease provides for occupancy. It also will provide for the passage of title at the end of 5 years. And remember our lengthy discussion of gifts and gratuities in earlier situations, when federal money becomes state money, it picks up a string of not violating gifts and gratuities. So there is a performance requirement that the Food Bank will have, which basically is that it's got to operate the facility as a food bank for 5 years. And if it does so for 5 years, there's no clawback, there's no grant repayment. However, there's an obligation for the food bank to continue to operate it after the passage of title for an additional 5 years, and that goes back to state and federal requirements. The documents that are attached provide for all of this. They are not 100% final. Athens-Clarke would like to have a provision added for an owner's representative for Athens-Clarke to have approval rights over the construction contract and the design contract. These are fine. We would work hand in glove anyway, because this is kind of like a project by a committee. We have 3 entities, 3 different documents. If anybody doesn't play well with others, the deal won't get done. In everybody's best interest that happen. The attorney for the food bank most recently, like yesterday, I think it was yesterday, but contract revisions came in, I guess it was Sunday, and I responded on Sunday. And having come to grips with this, food bank was asking for some things like caps on their monetary exposure and stuff like that, which makes a lot of sense, except the JDA is the wrong party to negotiate with. I had to be firm on the point that we are accepting no pecuniary liability. We are a pass-through. As a pass-through, though, we will acquire real estate, we will enter into a construction contract, and we'll eventually convey title to the facility. Enforcement rights are going to pass to ACC so that we don't get in the position of having to demand money from the procurement process. This will be, because the construction contract will be awarded by the JDA, there is the necessity for this to be a competitive procurement under the Georgia Local Government Public Works Construction Law, which ACC is set up to do, and we are not, and ACC is willing to do that. So With the approval of this resolution, all of these things I just described will be authorized, including the JDA entering into those documents with some changes. The chair, in consultation with council, is authorized to make some changes. And as recently as this afternoon, there were some emails about that. Nothing substantial, nothing that I haven't described to you. If anything comes up that's inconsistent with what I've described, I'll bow up, and we won't do it until we have another meeting. But we do need to move pretty quickly on this. I think the mayor and commissioner meeting tomorrow. So with our approval tonight, we'll indicate the JDA's willingness to enter into the IGA and the other documents. ACC will approve it. And there are special conditions on the grant award. The grant was applied for in November and awarded in December. That was either excellent work or this was something that was going to happen, or both. But we have to get back to the collective. We have to get back to DCA fairly promptly with satisfaction of the special conditions for the funding. An important part of this is the timeline, which is an attachment to the MOU, and you have that. Timeline provides for the initial design to be complete by the end of March of this year. There is a preliminary design contract for not a lot of money that the regional commission has entered into. There'll have to be an architect's agreement on top of that. And with that, the conditions are supposed to be cleared with DCA by the end of April. That's more time than I thought we had. I thought we had 60 days, but it looks like it's longer. Final design by June, bid documents complete by July. Proceed with the bid process with contracts being bids received in August, and I guess awards being made then. Again, ACC will be handling. We'll acquire the real estate in September. Construction will start in December, no later than 12/31 of this year, and construction will be completed no later than 12/31 of 2023, although the contracts will run to 12/31/2024. There'll be a residual responsibility that the food bank will have to continue to operate the project, as I mentioned, for 5 years after the term of the 5 years. So that's the deal. There are, this is a construction project being paid for by public funds. There are a lot of moving pieces. Everybody has moved quickly and cooperatively in this. And the JDA has an important role, an indispensable role, but it's the role of a conduit. We're not supposed to be stuck with any chores or any financial responsibility, and that's what the documents say. And that's what the construction contract will say.
So the only thing I'm stuck on is there on the memorandum between ACC and the Joint Development Authority, there is this section. We're responsible for verifying appropriate expenditures and submitting invoices, blah, blah, blah. Why is that there?
Well, the short answer is because it was there when I got the contract. And the long answer is that even ACC doesn't want to do that. That's been subcontracted out to the Northeast Georgia Regional Commission. And that is in the MOU, and we have the right to enforce that obligation, and it's disclaimed in our documents that we will actually do that. There is an overriding clause in the memorandum of agreement, and there's the statement in the IGA somewhere. It's understood that we won't do it. You can probably find that if you like.
Okay, as long as that's on the record, and it's not going to come back and bite me when Sam does an audit and said, I want to see all your program documents and ask, where's the verification of these expenditures?
Sam, just remember that we said this tonight. Are you still on the line?
Yes, sir. I'm with you.
So Dan, I would also add there is an MOU between ACCGov and the Northeast Georgia Regional Commission. And that MOU specifically states that they will be responsible for drawdowns, invoices, compliance, because this is a CDBG CV funding that we're getting with it. So federal funds, which requires a pretty significant level of compliance, and that will be the Northeast Regional Commission's job.
Yeah, I've got. Oops. Yeah, can you hear me? I've got one issue. I've scanned through the 3 things that we're talking about. There's a resolution that we have to agree to and sign. There is a memorandum of agreement, which we have to agree to and sign. But the memorandum of understanding and its addendum, nowhere does it indicate the JDA in the document as something that we have to sign off of. So I only see two documents that I was privy to that has us making a decision on. One is the resolution and one is the memorandum of agreement. The MOU is purely between the Clarke County and the any Northeast Regional Commission. We're not in that MOU anywhere that I can read.
Well, I'll give you a short course on third-party contract beneficiaries.
Okay.
We are not a signatory to the contract, but we are in the happy position of being able to enforce it without having to do anything because the contract says that we can. We need that in order to be able to say to the regional commission, you said you would do this. You can't agree with Athens-Clarke or the food bank that you won't do it because we can make you do it.
Is that in the MOA or in the resolution?
It's in the amendment to the MOU.
Okay. I guess I'll take your word for it. I looked at the I guess you're saying that we don't have to sign the MOU, but we have the ability to put the kibosh on anything that they do that we don't like.
Such as not performing, yes.
Okay. All right, that's fine. I just didn't see our name as signing on the dotted line for the MOU, so I thought, well, what are we actually voting on then?
It's to accept those rights. Because I knew the question was going to come up. Who's going to do all these things? And if I said the regional commission and somebody said, well, what if they don't do it? I had to have an answer for that.
Mhm.
Yeah, I understand. Okay.
Do we ever have to talk about this again at any other meeting, or is this a one-time thing?
Hopefully
It's
not.
Good question.
It's going to be a long couple of years, Stephanie, but so I'm sure we'll have to talk about it again. But if you vote on this and approve it tonight, I'll finish up the contracts. We won't have to meet again to approve the construction contract, although our name will be on it, or the acquisition of the real estate, although our name will be on it, because the performance of these contracts is authorized. I might ask you to let me present them so you know what's going on. But this is not intended to be a daily responsibility of the JDA.
Okay. Okay, I see the wording in the amendment that includes the JDA specifically in items CD. Anyway, so we're mentioned, but we don't have to sign off on it.
It's a happy position to be in.
All right, I see it now. Okay. So basically the vote that we have to take, so let me modify, since I believe I can modify my own motion. I'd like to move that we approve the resolution of the Joint Development Authority and the City of Winterville, an intergovernmental agreement and a memorandum agreement. Those two documents.
Mr. Chairman, may I request that the motion be to approve the resolution in the form presented, which will cover all that.
That's fine. I thank you for your wording. That's what I so changed my motion.
Thank you.
Do we have a second to that change? I'm not sure we have to second it once we modified it, but anybody want to second it?
Second.
All right, got it. Okay. So we've talked about it a fair bit. So is there anything else anybody wants to chime in about this before we take a vote?
Yes, I'm really excited to vote for this. I do want to say, though, I would love to hear from the food bank at some point. I'd love to sit and talk with them, get some perspective from them also, but that can be really whenever.
But that doesn't keep you from voting for it, right?
Correct. No, it doesn't stop me in the slightest.
Okay. All right. Any other comments or discussion of the motion? I'm not hearing any. So it's time to put it to a vote. So all those vote in favor of the resolution, raise your hand, say aye. I see a lot of raised hands. Motion passes. So we now, I guess you did say, Dan, that you and I could work out any little minor detail changes without coming back to the JDA for revote, correct?
Yes, by popular request, it's set up that way.
Yeah. Okay. I bet everybody else loves that too. Okay, now we have a resolution fully executed or fully agreed upon, so we can go back to our tabled discussion about the uncollectible loan policy.
Okay, let me share. Can everybody see that?
No,
Oh, sorry, I've got to hit share.
and make it bigger for me.
Yes, sir. Okay, so I think tonight, so for financial reporting purposes, I think we just scratch the writing off policy and decide on that later on. For
Good.
financial reporting purposes, we have we have enough here for the allowance method, and that would be the 60 versus the over 60 versus the 30 to 60 allowance method. And so that would get your assets to where they need to be for financial reporting purposes. And so I'll let you guys discuss that.
All right, I'd like to put forth a motion that we adopt the bad debt policy with the text stricken from the policy itself. Is that a second for that? All
I'll
right,
second it, but
Tim raised his hand. So,
Okay.
all right, discussion of the modified policy.
I wanted to make it clear that I'm not going to be looking at this policy until we do the next fiscal year's closing, right, Sam? And then we're going to see where are people at on June 30th of the end of this year.
I think that's a reasonable way to do it. Yeah, if you had something that was an anomaly that you needed to bring up, maybe that's possible. But yeah, I think that would be adequate to look at this. You're doing a financial report every year, so looking at that every year would be fine.
Now, we do know there is one that is not going to get collected because the guy moved out of the country.
I have a guy named Guido. I can go out and find him.
Well, we don't have to decide that tonight, but this is something that's going to come up because I know this to be the case.
I understand. All right. Any other discussion of the motion? All right. Hearing none, I'd like to call the question. All those in favor of adopting the modified bad resolution debt policy as it's shown on the screen, raise your hand. All right. Opposed? Nobody. Nobody I heard. All right. We now have a uncollectible loan policy approved by the directors. Next agenda item is our regular scheduled meeting. That's a given. It's going to be February 2nd at 5:30. It's already on the books as being there. So I'd like to go over, we don't need to approve that because it's a regular scheduled meeting. But I would like to entertain a motion to adjourn.
Motion.
All right, motion. Do I have a second? A lot of seconds. All right. All those in favor of adjourning, raise your hand or do whatever you want to do. I think we have a quorum on that, so we're done. Thank you for your time, everybody. We've got good stuff. Happy New Year to everyone.